All right, everybody. It looks like it's 12:30, so we'll go ahead and get started. Just really quickly, so you know, I am recording this session, so I will have the ability to post this on YouTube. So anything we go over today, you guys can have some access to it. I don't have a PowerPoint presentation, and so really what I'm going to do at this point is explain a little bit about the cash flow. I have already uploaded to D2L the assignment sheet. It's about 3 sentences. It's very short. And I've also uploaded a sample operating budget and a sample cash flow uh, into D2L as well. So hopefully those resources will help. Also, the format for this week will be I'm going to go through essentially my lecture, and then we'll have some time for Q&A, going back to the operating budget, and then I can continue to answer questions on the cash flow. Wednesday this week, during this time, once again, I will just have an open meeting where I can do demo. I can help you guys go through whatever you need me to keep moving forward and being successful in these assignments. Okay, so before I get started, does anyone have any questions for me? Okay, I'm gonna take that as a no. So let me just start off and just make a couple of observations here. When we did the operating budget, let me actually come back here to my operating budget. So on my operating budget, basically what we're trying to do is we're trying to create an estimate for what it's going to cost us to run our business. Now, I'll show you as I go throughout the cash flows today. After I went through and created my 3 cash flows, I went back and actually modified my operating budgets for each of the 3 consecutive years. So primarily what the differences are in my operating budget is as I added more projects, the resources I needed, let me go here to my second year's cash flow, the resources I needed increased. And primarily those resources were, I added another employee, so I had my health insurance benefits doubled is what I ended up doing there. I added another vehicle, so I added insurance to that. What else did I do? Because I decided to hire people, I did go ahead and assume I'm going to actually move outside of my home office and rent some space. And so I put some more budget in there for my annual or for my monthly rental space. And then, of course, utilities went up in my budget, as well as my things like office equipment, computers, printers, and stuff. So as you guys start looking at how your companies are projected to grow for 3 years, you do need to go back and make sure you adjust those budgets. My main expense in my budget year after year was the personnel, because I did add additional time to each of those roles. And so that did, I believe, become my biggest operating expense. So when we start moving into cash flow, it's a little bit different in the sense that we can't just take our projected revenues as we showed up here and our direct costs. At least in my case, I could not bring those straight across and use those, and I'm going to explain why. So if you guys recall, when I started this operating budget is for a startup commercial contracting business, general contracting business. And if you guys recall, last time I showed you this assumptions uh, tab that I added. I also showed you some of my staffing requirements. I moved that tab in just so I could have access earlier. And I spent a lot of time this morning just developing this assumptions page Just has a lot more information in there. So I think last time when you guys saw this, I had my 8 projects and I had a total contract amount. Since then, I've made some new assumptions as well to keep building onto here. And some of those assumptions are, I've essentially prorated out what my projected overhead and profit is on this project for my company for this particular project, and I've extended that down through all 8 projects. My general conditions on the project, I've done the same thing. And then what I've done on the balance of the $1.2 million contract, I've taken that and I just did a simple allocation. Essentially what I said here, if you look up here in my formula bar, is that my subcontracts, and this is the direct cost of the project itself, the subcontracts themselves going to account for about 90% of the work, and then supply contracts are going to account for about 10% of my overall budget. That will become important because where I'm going with this is I started building a model for my cash flow. I realized very quickly that when we start dealing with retainage on a project, that has some fairly significant impact on what our cash flow is. So I'm going to hopefully take you through this today and not confuse you guys too much, but just try to stay along, and please feel free to press that space bar down and ask a question or stop me if I'm going too far too fast. So going to my cash flow, and I will come back here to this assumptions page quite a bit as I go through this. Here's my cash flow for 2020. So let me first off just define what the purpose of this cash flow is. So again, in our operating budget, we defined what our projected revenues would be, what our projected costs were going to be. And if you remember when I talked last time, we looked at that more from an accounting standpoint, from an accrual accounting standpoint of when we'd actually count revenue and when we'd count as an expense. And that's really getting down for what tax purposes would be. Now, when we actually go through a project, we have a lot more things going on in terms of cash flow. And the main reason and the main point that we want to develop these cash flows strictly is we want to see what our cash needs are as a company. I think I've told you guys this before, but when I was out practicing, the most difficult thing I ever had to deal with, my largest challenge for the most part on projects, was every now and then I would have subcontractors that would have cash flow issues. They didn't understand the reason or the purpose of why we needed to establish operating lines of credit so we could operate our daily needs of our company. I remember saying this at the very beginning of the semester also. The number one reason when businesses fail, it's not because they're not worth anything. Okay, a lot of companies, if you were to look at their balance sheet, if you were to do some type of an appraisal, you would find that they potentially have a lot of net worth, but a lot of times that net worth is going to be in fixed assets. So where companies oftentimes get into trouble is not because they don't have a bunch of fixed assets that makes the company valuable. It's the mere fact that they don't have the liquidity, they don't have the cash flow to actually pay their bills month in and month out. Okay, creditors will only take that so long, and at some point they're going to put some type of right into action where they're going to protect themselves. So I had a family friend growing up. The dad, he owned a farm implement business. And I remember one night on the 10 o'clock news, they had this little soundbite showing how it was actually the feds came in and they shut him down. And the reason they shut him down was because they got some of the creditors and stuff got a judgment against him, because essentially he had all this farm implement equipment that was, I don't know if it was on consignment, it was lent to him in some way, but the problem was he wasn't able to pay his bills from a cash flow standpoint. And so it only took so many months or so long of some of the creditors not to get paid, when they went to the courts and had an injunction filed and basically allowed the government, essentially in this case, to come in and basically shut him down. So the cash flow, when we develop this, really the ultimate thing that we want to identify from this is what is going to be our cash needs on any given month, so we can make sure we pay those bills. Now, you guys can see my screen, I'm hoping. And if you look at this, this is essentially building off of that model that I started last week. And essentially what I've done here is in the month of April, because this is when I technically started the business, this beginning cash balance, I linked that back to my starting balance sheet. So basically, after I went in, and I'm going to say that I made all these purchases and I reallocated all the stuff on my beginning balance sheet, the cash I still have in the bank was $30,500. And so that's what I brought in for my beginning cash balance. Okay. From that, because I had several months I was not actually bringing any revenues in, I have zero revenues. I had also zero direct costs, meaning I don't have a construction project going on at this point. Therefore, I have zero gross profit, but I do have operating expenses. And this goes back to the operating budget under the general administrative expenses, is where I brought that number in. So coming down to the next line, the net cash flow, this right here is taking our gross profit and subtracting from that gross profit our operating expenses. That is what equals our net cash flow. Our net cash flow, from that point, we come down here to our ending cash, and our ending cash is our beginning cash balance, and we add our net cash flow. Now, I've got adding net cash flow because you'll notice that if I have a negative cash flow, I show that as a negative. So I'm adding a negative there. So you'll see that my ending cash balance, in this case, I've just simply drawn that cash balance down by $9,469. So essentially what this cash flow is telling me right here in my first month is I didn't borrow any money at this point. I'm just showing that of the $9,400 in overhead that I essentially paid cash for. Okay, moving ahead to May, your beginning cash balance after our very first cash balance will always be the ending cash balance of the month before. So you can see I've just created a link right here, equals, in my case, cell F20, which is what my ending cash balance is. So that's essentially your beginning cash balance is just moving the ending cash balance from the month before up to that spot. So once again, I didn't have any revenues coming in. I didn't have any direct expenses going out, but I did once again have more overhead. So you can see right now, just in my first few months, just setting up this business, I'm spending money. I'm not making any money. I get to the end of June and I'm down to $27. So I've spent my 30 plus $1,000 at that point. Come July, I've actually started, if you guys remember from last time, I started my first project. So at this point, I have direct construction expenses of $7,400, which gives me a negative gross profit now of $7,410. And I've got operating expenses of 13. So now I get into this next month of July, and my net cash flow is now a negative $20,000. Okay, so I just want to come back down here. So I've got I8, which is my beginning balance. I'm subtracting my net cash flow, and that is where I'm coming up with my negative 20,643. So now after July, you can see that I'm actually now starting to bring revenue in. So I've got my revenue of 54,000. I've got my direct expenses. Now let me just tell you something really quickly here. What's happened? Just because of as I'm doing this cash flow, I'm not looking at this from that accrual accounting position. I am trying to identify exactly how my outflows and how my inflows are coming in. So if I back up here to July and this $7,410 of direct expenses, okay, let me come here to my assumptions and let me show you how I came up with that. So in July, essentially, I was not able to, hold on here one second. Oh, so my direct costs in July. Okay, I've got to go back to my assumptions here because I am, for some reason, I'm not. Okay, I think I actually have a problem here in my cash flow because in July, I'm showing that I'm spending $7,410, and that should have come from my original expenditure of, yeah, so that $7,410, that's actually what I'm spending on the job site overhead. So what I've actually missed right here, I've got assumption H35. Let me just take a quick look at that. Okay, that's where I'm at that point. And so it's G32. So what am I missing on G32? Okay, yeah, all right. So yeah, this actually is correct. And the reason I don't have more than that, it simply comes down to the contract, both the prime contract and the subcontracts that I'm working with. So even though I am spending money in July, remember, I am subcontracting on the direct costs. 90% of this work is being subcontracted with subcontractors, and I have subcontracts with. Now, for those of you that are in the project management class now, because we're talking about this in that class, and the others of you that have had project management, remember that the terms of payment on those subcontracts are, it anytime during the month a subcontractor comes in and he works on the project, he's not allowed to bill for that project until the end of the month. And then when we get paid during the next month, that's when we would actually make that direct expense to the subcontractor. So essentially, I've got direct costs right here to the project, which, coming back here to my assumptions, this is my general conditions. So anything that I'm spending as a contractor during that month, that's basically a direct cost to the contractor, to the project, I've got to include that. And then I'm going to be a month staggered before I actually count that direct cost to the subcontractor. So when I come over here to August, this is when I'm going to be coming back here. And if I come up here to my subcontract minus retainage, this is H33. So I just want to double check that. So H33, that's when I'm actually expensing the direct costs that I'm doing from the month before. Now, this is a real important thing in cash flow, because before I added that, you would see my ending cash balance just growing exponentially. And the reason it was growing exponentially came down to the fact that I was only recognizing that I was paying the subcontractor before I actually got paid by the owner. Remember, in commercial construction, with the terms of our contracts with our subcontractors, we basically are not paying our subcontractors until we get paid as the general contractor. Therefore, we're basically using the subcontractor then as trade credit, and therefore we don't really have an expense outflowing until that inflow comes in by the owner the following month. And so that's essentially how those direct expenses came into play. So gross profit, just as you remember, this is just straight from your operating budget. Once again, it's revenue minus your direct expense is what your gross profit is. Your operating expenses is what the general administrative costs are from your budget, operating budget. And then, of course, your net cash flow is your gross profit minus your operating expenses. Okay, so let me come up here to August. I just want to go through a couple more of these months, and then I'll open it up to some questions for you guys. So I bring up my net cash flow, or my ending cash balance for my beginning cash balance. And then what you'll see is my first month of August, I have a revenue of $54,000. Let me show you where that $54,000 came from. So what I recognized here is under project number 1, I've got what I'm calling my gross revenue, and then I've got my gross revenue minus my retainage. So even though in my operating budget, I was looking at things more from an accrual accounting standpoint, where when I did the work, it became essentially an accounts receivable. But in commercial construction, we don't get paid every dime the next month after we have billed for it. So in many states, you will see that there's some type of retainage or retention that's held out. And that can vary. In some states, I know in the state of Idaho, you cannot withhold more than 5% as long as your subcontractor or your general contractor can provide a payment and performance bond. Other states, like in the state of Colorado, I believe you can go up to 10%. So I'm using 10% as the model right here. So when I'm saying the next month that I'm getting a revenue of $54,000, what I've done here is I've actually backed out my retainage, because in my cash flow, if I'm not really getting the money from the owner because they're retaining it until the end of the project, which happens often, then I'm going to have to finance that 10% somewhere. And so it needs to become part of my cash flow by recognizing that I'm not actually getting the real dollars of $60,000, even though that's what I billed for. The check that I'm going to get from the owner is going to be reduced by 10% because of that retainage. So I'm only showing that revenue of $54,000. And then when I come down here to my direct expense, this is going to be in terms of what I'm paying out. In August, I'm going to be paying out my general conditions. I'm going to be paying whatever I have on supply contracts. And then I'm going to be paying out also from the month, and this is again on the expenses, this is from the month before. So the general conditions are on the month of August, but the other dollars are going to come from the month of July, because in this case we're saying we've been paid by the owner. So if I come back here to the assumptions page, what I'm basically saying in August, I will be paying my, see if I can come over here, $9,000, $9,918 worth of overhead. And then I'm going to be paying to the subcontractor this $44,000 plus, excuse me, not the $44,000. I'm going to be paying him the $40,000. And then I'm also going to be paying my supply contract. Now, let me just take a minute and explain why it's the 40,000 and not the 44. So when I have a contract, a prime contract with an owner, when they have 10% retainage out on me, I pass that retainage down to the contract of my subcontractor. So if my subcontractor in the month of July billed me for $44,631, then I'm going to, the owner's going to withhold 10% from that. And so I'm only going to be paying him the $40,000. Okay, so what I don't want to set myself up for, because if I paid him the 44 and some change there, then what happens is I end up financing for him that retainage. So it turns out if you're a general contractor, the only thing that you're really financing in terms of retainage is going to be your own overhead, as far as your general administrative overhead. You're going to be financing your job site indirect costs, which is your job site overhead or general conditions. And then you're really quickly on the supply contracts. Typically in a supply contract, you're not allowed, or your suppliers will not allow you to withhold that retainage on them. So I've never seen many supply contracts where myself as a general contractor can withhold retainage for that supply. And so on that on that supply contract, I end up as the contractor having to cash flow that. So that is in essence where the 64,906 comes in direct costs. It's at 9,000 or just under 10,000 of general conditions. It is what I'm paying for the month of July to my subcontractors less retainage, and then all of the contract value amount for my supply contracts. So when I started off this earlier saying that I spent a lot of time under my assumptions and this whole page grew and got more complicated, yes, it really did. So I just continued down through after that point and just started allocating for when each of those revenues would be coming in, and then when each of those expenses are, again, offsetting the direct expenses for my project by a month from when I actually did the work. And then the other thing on here I want to show you really quickly is, I believe it's in the month of September. Nope, I'm wrong. Maybe I haven't accounted for it yet. So let me go back here to my assumptions. What I wanted to do here really quick, and I want to make sure that's happening, is project number 1 for myself, it goes, okay, that's why it's not there, because it does not end in that month or in that fiscal year. So let me jump over here to my cash flow of 2021. So really quickly on this cash flow, my beginning cash flow is the ending cash flow of the prior year. And then I simply come through here and I just keep going through that same process. But make sure that on your first month that you're always going back to the other fiscal year. So I end my first job in February. So in March, I make an assumption here that I get my retainage released. And so what I've actually done here is, in addition to the revenue minus retainage I'm making on my projects that are currently ongoing, which at this point is, it looks like at that point I've got project number 2 is the only project I have ongoing. So in March, besides getting the gross revenue minus the retainage, I'm also going to account for the retainage that's been released on project number 1. So my assumption is I finished the project, everything's been great, they've released the retainage, and I've gotten final payment. So if I come back up here, you'll notice on project number 1, this is my total retainage amount. So what I essentially did is I added this $120,000 retainage into my revenues for the month of March, because that would be the month in reality I would expect a check from the owner of project number 1 coming into my office. And then just like that, my direct construction expenses, I also have to make sure that I expend or I pay the expense of whatever retainage is due to subcontractors. So in that case, I added an additional $89,262 to my expenditures going out, because those will go out and pay those subcontractors that have had that retainage withheld. Okay, so that's how mine got really complicated. But the reality is, going back to my opening, or one of my opening statements, is our whole goal here is to identify the real cash needs that we're going to have so we can pay our bills going month in and month out. So let me just really quickly here just take a look at all 3 years of my ending cash balances. So as you can see right here, by the time I get to December, looks like my high for the year of 2020, I needed to somehow finance, hopefully with an operating loan or line of credit through a financial institution, almost $100,000. I come over here to cash flow year number 2. I keep going up. It looks like the high that year is about $208,000 is the line of credit I need. And then moving forward to my 3rd year's cash flow, and without going back to my business model, my year number 3 is when I'm have increased my assumption is anyway, I've increased my bonding capacity to $10 million, and I'm attempting to do or I'm planning on, my goal is to do my first $4.5 million project. So considering that, and considering the terms of payment that contract's going to get paid from the owner on larger projects, I'm going to have a much larger cash flow need to be able to pay all my bills. So you can see that by the time I get to December of 2022, I'm going to need close to $1 million of cash flow to be able to pay my bills. Okay, and that's substantial. So the real question will be is, after 2 years of doing business, will I be able to go back to my financial institution and procure operating loans or lines of credits that will help me establish those cash flow needs? Feeling pretty comfortable in my first year. Cash flow needs up to about 100 grand. I don't see a problem with getting that financing from a financial institution. Even year number 2 going up to just over 200,000, I think I'm going to be okay. But this number right here has me a little bit concerned. And hopefully before that 3rd year comes up, I'll be able to establish with someone my ability to have that type of cash flow out there. Okay, so that's a really quick introduction of how to do the cash flow. So let me open up to you guys if you have any questions on the cash flow, or if I need to go back to the operating budget. So this either makes complete sense to everyone or you're all lost. Which is it?
I'm all lost.
Say that again louder.
Yeah, I'm lost.
You're lost?
Yeah, I know you're putting up the video. However, can you upload this sheet, this Excel?
So I have a copy of a PDF, but I don't typically do the Excel because people just copy formulas.
Okay, because I seen there was like one that had just like this, what you're showing right now, right? I seen that one.
Well, I gave you guys an Excel. So as part of assignment number 13, I provided the Excel file that you'll be building all this in.
Okay, and that's on D2L.
And that is on D2L, correct. Now, I am going to actually replace that one here in just a few minutes because
Uh-huh.
I noticed that there was not for year number 2020, I didn't actually give you the formatting. Year
Mhm.
2021 and 2022, you'll have to copy and paste that formatting. I thought it was in there and I don't think it was. And so I was going to replace it so you guys can have that formatting as far as the lines and all that stuff. But it will be your responsibility to go in here and figure out how to um, build all the formulas and
Manipulate the
whatnot.
numbers.
Yeah. And
Okay,
then again,
that could
like
work.
I
Yeah.
said, on
Thank you.
Thursday of this, excuse me, on Wednesday of this week, this whole block of time I will reserve to just help you guys go through and understand how to do the formulas and how to build them and whatnot. So let me go into it's not the correct class. Give me 1 second here. Okay, so I'm going to try to go into D2L here. I'm not sure. I'll bring that back in just a second if it does. Don't we love to hate technology? Yeah, so yeah, I'm having some issues with it there. Anyway, so if you go into D2L under this course, there is, I believe, a folder that says course documents. That's where the template is. And then I have several other folders under the content area that will give to you guys the assignment sheets themselves. And then there's one, I believe it's called samples. And so I've given you some samples so you can kind of see how the numbers are and kind of work through those numbers. Okay, other questions?
Yes. I haven't seen an email for assignments 11 and 12, correct?
I thought I sent that
Or did
email
you already send it out?
out. Can someone verify yes or no?
I got the.
I got it too.
Yeah, I got the email.
Okay, so I did send the email for 11 and 12. I thought I did. It wasn't until was it Wednesday or Thursday, I think is when I sent that. So best thing to do is just to do a search of my name and hopefully something will
Mm-hmm.
come up. And if not,
Okay.
let me know and
Thank
I'll
you.
resend it.
I have a question in regards to the operating budget.
Okay.
And for the number wise for the chart of accounts, um, for 600, the general and administrative expense, you added some of the vehicle into that, but it's like number 1200 or something.
I've
So
got
is
eight.
the
Well, hold on. I've got one under 1861. Are you looking at my screen?
yeah. So does it not have to be under the 600 to be in the general and administrative expense? Or 6,000, sorry.
Um,
Because on the sheet, the PDF you sent, um, 600 has all the things that you have in the 6,000, but then 100, 1,800 is different, but does it not matter where it's located on this?
I
sheet?
see what you're saying. Yeah, so what I've yeah, so let me just kind of give you my logic here. Um, as a company, I potentially am going to have company vehicles that might be allocated into different places. So, like for example, um, I've got the 1861 for company vehicle here. That company vehicle is being allocated for uh, the home office, uh, project managers, we'll say company CEO. And so it falls under that general and administrative expense for that specific vehicle, we'll say. Now, I will also have other vehicles as a company that are going to be, let's say, for my job site superintendent.
Okay.
And that job site superintendent and that vehicle, they're going to be billed directly to the job. And so, going to your point, yeah, the numbering seems a little bit off. I chose just to move that 1860 under my general administrative, recognizing that this vehicle is strictly just here at my home office.
Gotcha. Yeah, that makes sense.
Okay, any other clarifications on the operating budgets? What about the cash flows?
Can you say again where you got your, like at that beginning, I think it was like 36 grand or whatever?
Yeah, so basically on when you guys download this sheet on the starting balance sheet, I gave you $50,000 cash to start with. So our assumption was that's the cash that we're going to start this company with. So I took that $50,000 and I leveraged some of it. I went out and I paid cash for office furniture, cash for computers and software applications. I put a down payment of like $5,000 for a company vehicle, a down payment of $1,000 each for that dump trailer and enclosed trailer. So I was leveraging some of that money. So after I spent the cash and leveraged some of it for some of those fixed assets, I ended up with having $30,500 left in cash. Total assets after I leverage everything, I've got $60,000. And so I basically just did that whole balance sheet. So what I said, Paul, on my beginning cash balance is of that $50,000, this is what I have left. I've already spent almost $20,000 just in other dollars, either to leverage to take out a loan and get some assets that way, or just flat out pay cash, because you don't typically, you're going to be a hard time to get someone to lend you money for software. So I'm just going to make I assume kind of a direct cash drawdown on that. So that 30,500, when I come to the cash flow, I just linked that clear back to that cell on the starting balance sheet, and that's where that starting cash came from. So I'm just saying that's how much cash I have in the bank on day one of this business starting. Does that clarify it, Paul?
Yeah, it does. Thank you.
All right, what else, guys?
Can
The
you click
total on
on your
the
assumptions tab again so we can see what assumptions you have set up? Is that something we need to do?
So my recommendation is you're going to have to somewhere probably add a tab and make some type of assumptions. Yes. Now, everyone has different businesses. And so you can't just take my business idea, or this breakdown, these assumptions, and just put them straight across the board. Those of you that are doing some type of a commercial company, these are probably good variables to have in those assumptions. Don't necessarily take my values as being what they need to be. You'll need to somewhat conform those to how you think your business is going to go. And, I made these assumptions on this is how I'm going to try to go out and the cross section of projects I'm going to go after based on dollar amount and based on time frame. So there is a little bit of work in here to be able to figure out how you're going to be billing projects or billing for whatever projects you're billing for, how that revenue is going to come in, what part of that revenue is going to be outflow to other subcontracts or suppliers, how much of that's going to be for my overhead. I know a couple of you guys are doing more subcontracting businesses, and so you would probably have a little bit less complication in terms of how I'm looking at it right here, but you're going to have a lot of wages that you're going to have to make sure that you're covering in your cash flow. Nothing worse than to not be able to pay an employee if you're an employer. Yeah, you don't usually retain employees very long if they don't pay the paycheck when it's due. So you have to start looking at a lot of those things. So again, I am more than happy to work with you guys individually or during the regular time also on just helping you go through some of those variables if you need. So does anyone have any questions that I can help you with as far as, well, I guess anything. Dylan, are you still there? You were going to say a question, right?
Yeah, I had a question just with the cash flow. Where it says total on the second column on the left, is that just adding up everything to the right?
Yeah, so this would be, sometimes I actually hide this column. Sometimes I like to see it. So this total is my total revenues for 2020. This is my total direct construction expenses for 2020. That's my total gross profit. So it is kind of nice to do this. And when we start talking about our income statement, which I think is our next deal that we're going to be looking at, these totals actually can be very helpful in determining those income statements. But to answer your question, Dylan, yeah, those are just a total of, in this case, August through December. That would be July through December, April through December. Okay.
Yeah, makes sense.
Other questions I can help anyone with? Don't be afraid to ask, especially if you're kind of caught up on this part. So again, let me say, business plans force detailed thinking. That's one of the purposes of it. And when you start trying to develop that business model and start trying to think about how your revenues are coming in and how your expenses are going to go out, you just keep developing what I would call scratch paper. That's what I'm calling this page, is in my mind anyway. It's my scratch paper. I keep developing it. It's about twice as comprehensive today, probably more than that, than it was a week ago when I first showed it to you guys. And we'll just keep developing it until I feel comfortable with what those assumptions are and how those revenues will be coming in and how those expenses will be going out. Anyone else? All right. Well, also feel free to email me if you want to set up another time where we can maybe just do this on an individual level. I am open to that as long as I don't have everyone on the same day wanting to do it. Because I know in some sense, I know some of you will be a little bit more vocal if you know it's just a one-on-one type deal. So let me know if there's anything I can help you with individually. We can maybe set up a Zoom meeting for 15, 20 minutes where we can share our screens back and forth, and I can help that way. So let me know that way. If not, I'm going to go ahead and actually stop the recording here now.